All right, everybody. So what I'm going to do is answer a bunch of your questions that you submitted through the Prime program. I want to remind you that if you want to dig in and find any of the extra material that goes with the class, just log into drboyceprime.com, drboyceprime.com. All right, so let's see. NY White says you signed up with a Schwab account and you funded it with 25,000 to get started, not feeling confident that you do it right. Can you walk me through my first purchase? Yes. If you go into drboyceprime.com, you will find many, many examples of simple scenarios where I show you how to acquire the stock, how to sell the option, how to protect your investment so that you can minimize your risk and how to generate the income. So feel free to log in at drboyceprime.com. If you get stuck on anything, you can go to our support team. Just email support@theblackbusinessschool.com. That's support at theblackbusinessschool.com. Essence says, why would someone exercise an out of the money call option? They wouldn't. I can't think of any reason why they would exercise an option that's out of the money. I had this occur on multiple occasions. Really, buyer executed the option when the stock price was 31.49, and they'd already paid me 36 cents per share, making the premium break even. Oh, yeah. Well, you know what, Essence? Options don't get exercised when they hit the break even. They get exercised when they hit the strike. So, for whatever reason, there's somebody who wanted to acquire that stock, and that's why they bought that stock from you. So typically, if a stock hits the expiration date out of the money, or sorry, in the money, actually you said out of the money, but actually it was in the money. If it hits an expiration date where the stock price has surpassed the strike, it's probably going to get exercised. And Affirm is one of those stocks that's just been shooting up like crazy. It's been doing extremely well. And so hope that you guys remember when things were really bad, I told you to get ready for when things get good. And when things get really good, I tell you to get ready for when things get bad. So for most of the stocks, things have actually gotten worse. But for companies like Affirm, things got really better. And now that stock is trading at 42 or something like that. And so the way I handled that was I didn't sell options on all my Affirm shares. I had some free floating shares, a few hundred, and that's been making just a gush of money. So what you want to do, generally speaking, with investing is my personal style is I like to uh, hope for the best and prepare for the worst. So that means I don't sort of want to, gunsling and risk too much of my money. But at the same time, I like to be in a position so that if things go really well, I'm going to be able to benefit from that. All right, next question. Danny says, disregard my last two emails regarding credits to my account. Robinhood informed me that I had a particular setting disabled. I think some other students may have had the same issue. Okay. Yeah, absolutely. I didn't see the email. But as you know, in class, you can bring your questions to class. And yeah, so I'm glad that that was resolved. Robinhood has pretty good customer service. So I would personally not feel, afraid to reach out to them. It's gotten better. Their customer service used to be pretty bad. Now it's pretty good, and you're able to actually connect with a human being. For a long time, one of the frustrations I had with Robinhood was that you couldn't talk to a person. Now they fixed that. They also have a pretty good credit card. The Robinhood Gold card, I got it and I looked at the reviews. The reviews are very, very good. So that might be something worth taking a peek at. So give me a second here. All right. All right. So the next question that was submitted. All right. The next question is, let's see. Hold on. Give me a second. The next question. Sorry, I got so many screens open. Sometimes I lose stuff. All right, let's see. As long as I'm using margin, I can't get income from selling options. Actually, that's not true. When you use margin, you can get income. So I'm glad that setting got disabled. Maybe in class, Danny, you can let us know or let our support team know what happened. That way we can make sure we warn other people about it. Willie Powell says, I only have $1,000 to invest in stock. What would be one stock I could buy one contract, which equals 100 shares? To get me started selling options. Okay, so remember, to sell options, you have to buy 100 shares of the stock. So that means if the stock is $8, you need $800. So you could do something like that for under 1,000. The big thing, in my view, that you'd have to be just a little concerned about and careful about is that if you don't have extra money left over, it might be tough to have enough margin, or sorry, enough money available to buy your puts and protect your position. So that's just something I would kind of keep in mind, it's as a precaution. But for the most part, you can get started with small amounts. Maybe if your capital base isn't as big as you want it to be, perhaps you can get together with family members and show them what you're learning in class. This is a great way to make extra money. My wife and I just sold one of our properties, and we took that money, and we don't want to do a lot of real estate. We like real estate, it's okay, but I'd rather invest in a real estate investment trust because I found that landlording just isn't my thing. I don't enjoy worrying about whether the tenant's going to pay the rent. I don't think the cash flow is that great. Also, I don't hate real estate. I like it. I think it's important in terms of a place to park money, and to grow wealth, and for diversification. But as far as like being an economic engine that will really put cash in your pocket, I think options are a better solution. But safely doing options. What a lot of people are doing online is they are getting people to invest in options and doing these sort of gambling casino style flip trades. Like, okay, you buy $1,000 worth, you turn it into 5,000, but most of the time what happens is that 1,000 turns into zero. And so the selling of options is where you're selling risk, you're selling volatility to the gamblers. You're selling to the gamblers. You're the house, they're the gambler. The house always wins. We're literally using the money from the property to buy stock and sell options on the stock. Let's see, Davin King, if you don't have, and by the way, and just for the record, the amount of money we make from the rent is about 1/3 of what we make from selling the options, and we don't have to do any work. That's the other thing that we like, and it's also much more liquid. All right. Davin King says, if you don't have a lot of startup capital, what's the starting amount for a beginner? There's no minimum amount. You just have to have 100 shares of a stock. The students I've seen do really well, the ones who have at least $10,000 that they can allocate toward the strategy. So I think of it like starting a business. It's hard to start a business for under $10,000, and so you can find partners and stuff that can work with you. I think partnership and connecting and networking with people where you can make deals. Making deals in partnerships is a really great way to make money. In fact, when I open up a school one day, when I become a billionaire or something, and I can, put $100 million toward a school, that's one thing I'm going to teach the kids to do is how to be a good business partner, how to conduct a business meeting, how to be professional, how to connect with others so that you can get people that will supplement what you have. Because a lot of us sit back and we struggle and we stay broke because we don't have everything we need. And we say, well, I'll have what I need in 5 years. Well, instead of waiting 5 years, find somebody who can get it to you in 5 minutes or 5 days or 5 months. Why you have to wait 5 years till you do it? You don't have to do everything yourself. What did you learn about Children's Place to make you remove it from MMG? Nothing, Kawana. I didn't hate the stock. It just didn't make the moneymaker grid. So if you want to see the latest moneymaker grid in terms of assets that I believe generate the most income, just log in to drboyceprime.com and look for the moneymaker grid. If you have any trouble finding it, you can reach out to our team members at support@theblackbusinessschool.com, and they can tell you where the moneymaker grid is located. All right, let's see. Next question is El Haj. When buying puts and your puts hit the price you purchased them for, does your account automatically get credited? No. Because if the put has not expired, then there's no reason to do a trade or credit. When it expires, that's when you get the trade or the credit or whatever it is, or the debit. I had puts on Coinbase at 180. It hit it last week. Yeah. So if the option expires, then yeah, there's everything gets converted to cash. But if the option doesn't expire, then you sell the option. So that option, chances are, since Coinbase stock has dropped quite a lot. Let me see how Coinbase stock has done lately. Coinbase stock has dropped. Yeah, it's okay. It's down to about 188, so it's gone up a little bit lately, but it did drop as low as it looks like what? Let me look at the last 5 days. I think it's okay. Maybe it did. I thought it dropped below 180. Maybe it didn't. Let me see. The lowest, yeah, okay, I see 178, so it's gone up a little bit since then. Yeah, so when we were talking about Coinbase in class, I was mentioning that that's a risky asset and that you really want to have your puts in place. So congratulations to those of you that invest safety first. That's something that I think is really important as a general investing principle. Protect your money and then go make more money, but don't make more money without protecting what you have. Angela, when you are selling a call option, should it be an open or closed order? It's opening. When you open the option, when you open the transaction, you're opening, you're buying to open or selling to open. I did my first trade with Mara and had to buy it back as it was losing money on my shares. I did a test trade. I don't think you always have to buy it back. I think if you sell an option and it's a covered call, sometimes you just, it depends on how you want to approach it, but you don't have to always buy it back. Now, if you do a spread with an uncovered spread, yeah, Yeah, there's that's when you become a day trader kind of, or a swing trader or something, which means that there's rules where you get to the point where you've lost 45, 50% of your investment. There are people that say just get out, get out while you can. But I don't do a lot of day trading. I don't do a lot of, that stuff because I don't think day trading works. At least the research. Again, I'm not here to tell you what to do. But I will say this, if I was to go into Harvard University or MIT and say, hey, I want to be a day trader, and I believe that signals and candlesticks and all these other techniques that they use in day trading, I'm going to use that to make money. They would probably say that the research does not confirm that that is a good, consistent way to make money. What a lot of people don't know is that 90% of day traders do not make money. And what happens is that the 10% that do make money, they kind of tell the other 90% to try it. And I hate saying it like this because I know people that are day traders, very good people, and I hope that they're all making trillions. I want them to be very rich, but people don't tend to tell you when they're losing. They tend to tell you when they're winning. So just be mindful of day trading. I don't think day trading is a great way to make a living, nor is it a great way to build wealth. Buy and hold works. Selling stock options works for income generation, even though there's always risk. Every investment that you ever make has risk. There's some lower risk stock option strategies that can generate some wealth, long-term income and wealth. So that's what we tend to focus on, things that are a little more conservative. I want you to be in a position to protect your money. So when you come to class, you'll notice I spend more time telling you how to protect the money you have than I spend just telling you how to make more money off of that. I want you to be safe first. Okay. Put your seatbelt on before you invest. Okay. So if you want to see some of the previous lectures we've done, they're all loaded in the system. Just go to drboyceprime.com, drboyceprime.com. You can log in. Everything's there, all the examples, the moneymaker grid, everything that you need. Michael, what's up, Doc? Under what circumstances is it a good idea to roll a leap option down to keep the same expiration date? So let's see. So roll a leap option down. So I guess it depends if you're a buyer or a seller. So if you are a seller of the leap option, then that means that you sold upside to somebody, right? So if that stock drops dramatically, like let's say the stock is trading at 10, you sell a leap, with a strike of 15, but the stock drops from 10 to 5, then you can roll that down and get some extra cash flow out of that. Or you could just buy it back at a discount price, depending on how you want to do it. So there you go. That would be a scenario. So any dramatic change in the stock price tends to lead to an adjustment that is doable if you want to make it, or you could just chill and not do anything. Some investors do that. You don't have to always be active. People want to actively trade, and I can tell you, a lot of investing, in my view, it's a lot like playing poker. I love to play poker. I'm not a gambler, but I like the game of it's a strategy, math, psychology game, so it's a lot of fun. And the biggest rule in poker is that most of the time you don't do anything. 75% of the time when I sit at a poker table, I do absolutely nothing. I'm sitting and I'm waiting for my spots. I'm observing. I'm taking in information. I am not moving, actively moving. Some people think you got to be gunslinging and gambling and all that. And people do that with options. They're just constantly trying to get these quick flips. And that fast money is not that fast money is the don't last money. So I think the slow money is the go money. That's the money that lasts. That's the money that actually stays in your account. So anyway, if you want to see more of these strategies, just check your login, go to drboyceprime.com, and everything's there, drboyceprime.com. Danny, is it possible to find pregnant stocks? Yeah, you can look at on different platforms and find out which stocks are pregnant, or the stocks that have information that's about to be released. That's what we call a pregnant stock. So yes, pregnant stocks are tricky though, because those are the stocks that are about to have an earnings release. Like Nvidia was very pregnant this past week because the earnings announcement was about to happen. I didn't really touch Nvidia because I didn't want to gamble. I didn't want to get in there and hope for the best and try to see if I could somehow make a quick win on Nvidia. Part of it's driven by the fact that I personally feel like Nvidia could be overvalued. I'm not a big fan of that. Then second of all, is that I just don't like doing coin tosses with my money. That's just not fun. I'd rather do something that's a little more stable. For me, a bird in the hand is worth more than 10 birds in the bush. So, and a lot of people got burned on Nvidia because they believe Nvidia can do no wrong, that it can't come down. And Nvidia the Nvidia stock is like, okay, you're gonna learn today. So in fact, let me see here. Nvidia stock is showing people the stock went down 6.5% today. So this past week it's gone down what, say, okay, about 6.6% the past week. I'm not terrible. It's up a little bit for the month though, and for the last 6 months, it's been doing great. So if you're an Nvidia holder, it's not like you lost all your gains, especially if you've had it for the last 4 or 5 years. I've had Nvidia since literally 2019. So I kid you not, like the current price is 117. I probably bought it for $10. I bought it before the pandemic. Before the pandemic, if you account for the stock split, Nvidia was trading at $5.30 a share. Now it's at 117. So it was literally trading at 1/25th of the current price. That was when I bought Nvidia. I wish I'd bought 1,000 shares, right? But anyway, but I didn't. But that $5,000 investment turned into 100,000. At that point, my thought was like, how do I protect this? So I shaved some off, sold a little bit. I didn't buy anymore, and I don't plan to buy anymore anytime soon, unless the market just has a complete collapse, or there is some additional clarity around what AI is going to do in the future for revenue generation. Jennifer Castleberry says, Dr. Boyce, when monitoring our options positions in Robinhood, what should we look for? Robinhood sends options performance notifications such as total return down on a firm option. What does that mean for me as a seller of covered calls and buyer of puts for risk mitigation? Um, okay, so what I would say is there, remember that when you talk about investing, there's three types of gains or losses you can have. There is the paper loss, which is the asset that you own that just simply goes down in value. You can sometimes wait out a paper loss. It's like somebody telling you that it's raining outside. Just because it's raining outside doesn't mean you got wet. You only get wet if you go outside. So if somebody tells you that the value of an asset that you own has gone down and you believe it's temporary, then you can wait it out because you're not going to experience the loss unless you sell the asset, unless you go outside, so to speak. Or think about it like if you get married, if someone says, "Well, you're a really handsome man. A lot of women would love to date you." That only matters to me if I'm single. If I'm not single, then it doesn't matter. I don't care about that stuff. So ultimately, the paper loss is like that. It's on paper. It's theoretical until you make it real. Then there is the realized loss. That's when you actually sell an asset for less than what you paid for it. That's when the loss really becomes real. The IRS is involved now, and you lost money because you bought something for less than or more than what you paid for it. The third type of loss is what we call opportunity cost or FOMO. The opportunity loss is, dang, I could have made all this if I'd held on to this stock, if I'd not sold the option, I could have made all this money, but you didn't make the money. You saw the money kind of run past you, and it upsets you. I don't worry so much about FOMO. I just get I get what I deserve, and that's it. And I'm okay with FOMO if I make the best decision I can with the information that I have. Paper losses matter, but they only matter to me if I plan to sell the asset soon. So I don't tend to sell unless the sun is out. When the sun is out, meaning the asset value's gone up, that's when I sell. And then the third loss, realized loss. Sometimes you have to take it, but if I don't have to take a realized loss, I don't. So part of the reason that you keep cash on hand and you stay liquid is so you can defend your portfolio by not having to take a realized loss or not having to make a loss real in a bad time. Like I think that in investing, one principle, again, not investing advice, but one rule that I believe in is you stay liquid so you don't have to sell into a bad market. You also stay liquid so that you can make investments in a bad market because that's when everything's cheap. So by sort of sticking with basic principles like that, that's what can help you understand like what's working and what's not. So the numbers I would pay attention to in looking at my options portfolio is of course the value of the stock does matter, and being able to know what kind of loss you really took. Was it realized, unrealized, or FOMO? Second of all, that liquidity number. How much, like are you getting a margin call? Margin calls, are like a virus for your portfolio because margin calls means either come up with cash or sell your stuff. I don't want you to be stuck in a position like that. So the way you prevent that is you keep cash on hand. Cash is like a financial bodyguard. It protects you from volatility. It keeps you from having to sell. It allows you to maintain ownership. So that's really one of the goals that you have. So I would pay attention to that. I would, if you have a stock that goes past the strike price, I would try to figure out like, okay, what's going on here? Do I have some extra shares on the side I didn't sell options on that are going to keep making money as the stock continues to escalate? Did I buy, maybe I bought some out of the money call options that are defending me against that position? Did I prepare? And then just thinking about what am I afraid of? What am I worried about? See, the thing about investing is it's very, very difficult to predict what's going to happen. That's really hard to do. But you can defend against the things that you think might happen. You can pick your spots and just say, okay, it would really bother me if this occurred. Well, there's insurance for that. It would bother me if the stock shoots through the roof and goes crazy. Well, you can get insurance for that. Everything in the market you can get insurance for, but insurance, just like the real world, insurance always has a cost. So I would kind of pay attention to the variables that matter for you and make sure that you're liquid and you are adjusting and that you've adjusted, try to adjust as much in advance to prevent problems before they happen. It's very hard to fix a financial problem in the markets after it's already occurred. Like if the stock collapses on you and you say, "Oh, let me go buy some puts." Well, the stock's already down now. Those puts are going to cost you a lot. Just like I always tell you that umbrellas are very expensive in the rain. Remember that we talked about that in class. So you buy your umbrella when the sun is out, and that involves financial consciousness, which is proactive thinking, where you're looking ahead. You don't look at what's happening. You don't look at what's happening. This is the biggest mistake that happens in investing. Let me just share this with you guys. The biggest mistakes I've seen are that people tend to pay attention to either what is happening now or they pay attention to what has happened in the past. They'll say, "Oh, the stock has gone up a lot. I'm going to buy more of it." Why would you buy more? The run up has already happened. The big event may have already occurred. You may be late to the party, or they'll look at what's happening right now. Oh, the market went down. I got to get out. And the market's built on not what has happened or what is happening. It's built on what is going to happen. And the problem with looking at what's going to happen is that you don't want to try to be in the business of doing it the wrong way, where you're trying to predict the future. Nobody knows what's going to happen. All you have is this quantum space of probabilities. Well, this could happen, this could happen, this could happen, this could happen, this could happen. And you assess probabilities and possibilities, and you look at the scenarios that scare you and the scenarios that you want to aim for, and you position yourself to be ready to receive that, whatever that is. You see, so looking forward is important, but when you're looking forward, you're not looking like this. You can't look straight forward narrowly because you don't know what the reality is going to be. You got to look broadly. You understand? So really for an investor, multiple things are happening at once, and you're defending your portfolio against multiple things, knowing that you can't defend against everything, knowing that you're always going to look back and it's going to be like, "Oh man, hindsight's 2020. Ah, dang it, the market crashed. If I'd done this and done that, I could." Yeah, you could have done all that, but you didn't know that at the time. You knew what you knew, what you knew, and that's it. So that's my thought on that. Um, Again, I did some lectures on this stuff. If you log in to drboyceprime.com, you can find some of the stuff that's there. drboyceprime.com. Eddie Davis, I've learned from you to buy puts after you sell cover calls, and I've used Option Dash to research good premiums. But is there a technical indicator that lets us know if it will be a good company to sell recurring contracts on as opposed to their 1 week premium drop? Yeah, I think definitely not. I'm not a big fan of picking up stocks that are pregnant, where they have some big news event that's going to shift the premiums that you can earn from selling the options. I tend to look to make sure that they're not in the middle of some extraordinary event. You can also look at the history of a stock to kind of see if there's a difference between a company that started 2 years ago versus one that's been around 10 years, where you can get a range of what possibilities might occur for the stock. I think also just kind of knowing that there's risk that you can't predict and just defending against that risk can really help you quite a lot. So let's say that I don't know what a stock is going to do. Let's say it's a crazy wild stock, like the Donald Trump stock is a garbage stock. I've told you guys that it's not very good. Well, if I can still make money from that stock, and if I properly hedge against all the risk that's there, it can be as safe as anything. You can make a dangerous stock very, very safe. It's just like how you could take a person that's really dangerous, but if you put them in prison and put them and lock them up and make sure they can't move more than 10 feet, like they're not dangerous anymore. You've annihilated the risk. Not to make light of prisons, because y'all know how I feel about that. But still, though, it's doable. It's doable. You find the risk and you mitigate that. So ultimately, I would say that it's not so much a matter of really just always avoiding certain stocks. It's a matter of just knowing what you're getting into. Remember, every stock, it's like a little bit like dating. My wife is a relationship therapist, and one thing she always tells me is that there's somebody for everybody. There's somebody for everybody. So if somebody says, "Oh, well, you're overweight and you got 3 kids, nobody's going to want you." That's not true, because there's somebody out there that will want that person. Or I'm 5'8". I'm not super tall, but there were women that would say, "Oh, well, I only date guys that are over 6 feet tall." But there were women that did like me, right? And it's a matter of picking your spots and finding the person that's for you. Not that one person is better than another person. So the same thing is true with stock. If you look at any stock that's on the market in the S&P 500, for sure, every single one of those stocks will have thousands, if not millions, of investors in that company. And all those investors will come together and form what is called an equilibrium, where they will have a price that emerges for that stock that they all agree that this stock is worth. So that means that even if you look at a stock and you're like, "Oh man, who would invest in that? That stock is too risky." Well, there's a million people that disagree with you, because apparently there's a bunch of people that already own that asset. And the reason that they own the asset and you don't is because that's the stock for them. It's like a man looking at another man's wife and saying, "Gosh, I wouldn't marry that lady," or whatever, but he did because she apparently has what he wants and what he needs. You understand? So I wouldn't necessarily look at investing as, "Oh, these are definitely bad stocks, and these are definitely good stocks." I think it's a matter of figuring out, what kind of investor am I? What am I looking to accomplish? What am I afraid of? And picking the stocks that kind of fit that criteria. And the hard part about it is that there's thousands of different assets out there. And so that's so when I put together the moneymaker grid, I focus on specific criteria: maximizing income and understanding the risk. And so if you log in at drboyceprime.com, you look for the moneymaker grid, that's the criteria that's selected. It does not mean that there can't be any other stock anywhere in the world that will be worthy of an investment. It just means that these are the ones that, based on the criteria that we discuss in class, appear to have the features that we're seeking as people that are looking to generate income. Okay. And so, and the point of the matter is to say that once you form your capital base, you get with your family and you lay out some basic strategies. There's hundreds of families already in the class right now that are generating thousands of dollars every single month. And the best part that I like is that the ROIs are better than real estate, most real estate deals. I like real estate a lot. In fact, we're going to do Dr. Boyce Real Estate tonight with Constance Carter. We do all kinds of real estate stuff in the Black Business School. But I also have to be honest with you and let you know that I literally today divested from some of my real estate because I want to go deeper into stock options. My wife and I made that decision because, not because real estate's bad, but because we don't enjoy being landlords. I felt like there were ways since I know options so well, I saw ways to generate higher cash flow. I also wanted something that was less time consuming and easier to execute. Real estate can take a lot of work, a lot of time. I did a one-on-one consultation with a woman not too long ago who had real estate in another state, and she had to fly back and forth, back and forth. She had to deal with shady contractors. She had to work months and months and months to get the property ready, and she had to put $117,000 into the property just to get it ready. And I said, "Is this something that you wanted to do? Does that feel good to you?" And she said, "Yeah, I liked it because it was a learning process." I said, "Good. I'm glad you liked it, because if your goal was to just generate maximal revenue, I could show you some assets you could purchase on the market in a matter of seconds and literally generate thousands of dollars every week that would exceed the amount you'd probably make on the real estate, and you wouldn't even have to leave your house." Right. So this is why options are very powerful. And I commend you for looking into it, because for some reason, a lot of people don't, but it's a really great way to generate extra income if that's something that you're looking to do. All right. So anyway, if you want to log in and get your material, don't forget, log in at drboyceprime.com. That's drboyceprime.com. Second of all, if you have any questions about anything in the Black Business School, we have our expert support team that is available to speak to you anytime. Just email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com, theblackbusinessschool.com. They can talk to you there. Lastly, at the All Black National Convention, we are going to have a gathering of all the Prime students. So if you want to come to the convention and meet other people that are in the class, then feel free to come to Chicago. It's October 25th to the 27th. You can go to allblacknationalconvention.com. That's allblacknationalconvention.com.